Hey, what's up, guys? Sam here, and I'll be doing the free video for Friday, October 14th, 2022. So, just finished doing the premium video for the good folks in the gold room, and we do what we do every Friday. We look at the indices, and then we go and we look at every other part of the market that matters. We looked at bonds, we looked at the dollar, we looked at VIX, we looked at investment grade bonds, we looked at junk bonds, and it all looks the same. So, in a way, it makes these videos easy. I don't know if you guys find these more or less interesting when we have a very specific and dedicated focus, which is the index, as opposed to 100 little stock picks. Personally, I prefer the index and big picture conversation, but I know how it goes. So it's going to be a continuation of that for this video. What we're going to be doing here, I'm going to show you. What do I want to show you? How much do I give the good folks on the YouTube? As you have a secondary tab open playing a cat video. All right, let's give you one, two. I'm going to give you 5 things. It's a Friday. It's October. It's the best month. I'm going to give you 5 things. And I'm going to make it real simple. This is all the only 5 things I think you need to know. And if you know this, I think you'll be in a much better spot than somebody who knows 100 things, but not these 5. Let's go. SPY, number 1. Has anything really changed here on SPY? I'm not going to dive into this too deeply because nothing has changed, right? If you were having a downtrend, you would be downtrending on the 21. And as I sketch in the 21 there, bang, bang. Monster short squeeze yesterday. It runs into the 21, rolls over, doesn't work. It's not entirely busted, right? It really, you can make an argument for it, but you don't want to see a candle like this. Failure off that level. It doesn't inspire confidence. If you look at the 200 here, you're dancing on the 200. So the levels that you need to know are going to be the weekly 200, this 50% retracement of the high to low from COVID high, low to high is 349, and that ended up being almost the nut low. And even though I don't think it's relevant because I don't think we popped there, 380 as major resistance. There is a very strong potential that we're going to see the 340 target that I gave you back in March. And there's an even good potential that you will come down and hit this 618. I know it says 382, but it should be flipped. You'll hit this major Fibonacci level here around 318. Okay, so 318, 349, the weekly 200, and 380. So here's how I would look at it. Resistance, support, support, and I would call this support resistance because it hasn't really been proven. So simple enough, right? Now, even though you may not have my indicators, hopefully they're just simple enough that you don't need explanations. Squeeze fire short. Red on top of green equals bad. Arrows pointing down equals bad. So that's one. Not an overly exciting one, but that's one. I'll save the big one for the end. So from here, let's go to bonds. And I'm going to do this with ZB. This is a 30-year bond future. So in order for the market to have any type of lasting low, the bond market needs to find a low as well. Bonds can't keep dropping like this at this rate of speed. This is unprecedented. And have the market work, right? So as long as every day the bonds are down a big chunk, stocks are going to be unhappy. So with bonds here, I just wanted to show it to you, right? Just relay that conversation just so that you understand if the bond market isn't making a proper low, which it clearly is not, the stock market will be unable to make a low. Now again, you can see here, this is way worse than the stock market. It's the crash that retail is not talking about. So really, there's not a lot here. I mean, you are at a support level, but the momentum is really, really bad. So again, just kind of stick this one in your memory bank. Remember to watch ZB every so often. You don't have to memorize it or anything, but if bonds can't make a low, the market won't be able to make a low either. I was going to show you 5 things. Let's see, what was the 5th? I can't say 5 and then only show you 4, right? What's the 5th? I'm going to have to double dip here on the bonds to give you 5. In reality, it might only be 4. So, cue the scary music. Sam's going to tell you some nighttime terror stories. So get your blankie, turn your nightlight on. It's that time. LQD. LQD is investment grade bonds. So it's like a basket of really, traditionally like blue chip companies. You'll note here, and I just want you to pay attention to one thing. It looks like the bond chart, right? That's no surprise. It looks like the ZB chart because these two are basically going to be trading in tandem. But the main thing I want to stress, that's the COVID low. It's the end of the world low. Why is investment grade currently below the COVID lows? So that's a question I can't answer for you. The only interpretation I have is that it is wildly bearish. But I can't answer that question for you. I guess I can. The market sees something worse now than it did back then. That's really the only answer. And also interest rates have risen tremendously, but that's a different answer. So you have this dynamic of the COVID low and then a lower low, right? That on itself is bearish. My thesis that I'm putting out there, if this chart, LQD, is marking the path forward for equities, which is a strong argument I could make, then the SPY is right here. Right? So what does this imply? If any of this is true? Well, it implies that the SPY has a strong potential to actually not even stop at that 3,400 target that I gave you, or even 3,200. It says that this chart implies that the SPY could theoretically actually get back to its COVID lows. So don't take that as a rule of, law of nature. Go out there and try to disprove that. Real quick, because I said I'd give you 5, but I only have 4. I'm just going to double dip here. It's the same idea. And then I got the big one for the end. So HYG, the only thing here that I want you to pay attention to, we just looked at LQD, which is investment grade. That's like, the blue chips. This is like the loser bonds, right? This is like subprime, like someone who can't find 2 nickels to rub together. This is HYG. That's the low. Notice how HYG is trading above the COVID lows. So interesting dynamic that you wouldn't expect. And I just posed the question to you because a few people will watch this video. Why do you think that is? Why do you think HYG is doing better than LQD when HYG is junk and LQD is investment grade? You could you could spin that as bullish, but I don't see how. But it is interesting. So these are everything that I'm showing you here, these are all things that need to find bottoms before the stock market can bottom. And as we've gone through in this video and we've looked at these products, the bonds, LQD, HYG, actually I do have, well, now I'm going to give you 6 because I remember the 5th one. How did I forget the dollar? Did I not show you the dollar? How do I forget the dollar? The almighty. So the recipe: bonds up, LQD up, dollar down. And that should be enough to make a low. But you don't have any of those things going. So the dollar here, if anything, it's just absolute perfection, right? You have a gorgeous trend. It's gorgeous. And then every mid-level buy signal, you see all these little arrows? Every one of them is a good buy entry. So as long as that continues to happen, this set of signals right here is absolutely perfect. So there is that. So simple enough, right? Dollar needs to come down, bonds need to go up. Simple stuff. So let's go to the entree. the big one. Let's get rid of my drawings. And yeah, this is fair play. Let's go. So I would like for you to pay attention to a couple of things. And I'm going to make this as simple as I can. And this is the most important thing that I'm going to show you today. Well, actually, the rest of the stuff that I showed you is pretty important. But this one is, it should make, well, this one's gnarly. This one is gnarly. Try to find a point in time where the VIX chart on a monthly time frame. Mind you, the VIX doesn't trend, right? The VIX rarely will do this, or rarely, well, it will trend lower sometimes, but it rarely trends higher, right? It's a mean reversion product. So if it trends higher, it goes like this and comes back. If it trends lower, it does this and goes up. So it doesn't, don't look at this like a normal chart, right? There's a specific way to read it. But we can use still general chart principles for this. So I'm going to highlight a point. Let's ignore this big spike here. I don't remember what that was. 2008? Did something happen? Let's just ignore it. So we'll start working from here. Is there any point here where you see the moving average is correctly positioned? Meaning that it looks like this, basically. I'll just give it away. You see how it's green, blue, red here? That's what it should be, right? That's a bullish stack. The green is the 21, then the blue is the 50, and the red is the 200. Even during COVID, which was right here. Actually, I'm not allowed to say that word on YouTube. I'll come up with a funny replacement word for that word. Even during Pokemon right here, you see how the red line and the blue line were not correctly positioned to support much of anything, right? It was green, red, blue when it should be green, blue, red. So even during the giant event that was Pokemon, you didn't have the correct structure. If you look back 10 years, at no point, you see how the red line's on top, red line on top, red line on top, red line on top, red line on top. That's a bull market for stocks. Here, it's not correct either, right? So, a couple of points. Even the Pokemon did not push it sufficiently to structure it correctly. Point one. Point two, if you look back 10 years, at no point was it structured correctly either. Point three, the current moment in time that we're in is fully structured. Green is green, blue, red, and the green and blue are pointing up. So from a structural point of view, you now have a supportive net underneath the VIX, and basically it's like a net slash trampoline slash launching pad. So what's happening next? Well, let's keep going. So let's pay attention next to the Squeeze Pro. Let's ignore this thing that I can't remember back here. Something must have happened. People won't get that that's sarcasm. Let's ignore this and kind of start working from here, right? So I think that's fair play at the end of 2009. Negative squeeze histogram, flat, negative, 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 slightly up. Look at this little tiny dot for the Pokemon. That's the impression the Pokemon left on the VIX chart. What happens next? It flattens out and goes right back to being down. So down, 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 right? With the Pokemon being the one exception, where it has a one dot little thing. Look what it looks like now. 3 sequential stair-stepping bars higher. When did it look like that before? Okay, well, we have a chart in front of us. We can go back to this event back here that I can't seem to remember. Doesn't that look very similar? Now, one point to make. This event back here that I can't seem to remember, even though the squeeze histogram mirrors, and honestly the one now is worse, but let's say they mirror each other. If you look at the underlying structure, you see how back then it was green, red, blue, launch. Here you actually have green, blue, red. So this structure, there's only one other analog on this chart. This moment is the analog to this moment. The problem is that the current moment, even though it's an analog to the previous moment, this current moment is actually significantly more structured and launch ready, if you will. So this is the big one. This is the big one. So is it possible we see VIX 70? Yes. Is it possible that we see a higher VIX than we've ever seen from this event? Higher than Pokemon and higher than this guy over here? Don't write it off. I think this is a compelling case. Now, just because I make a compelling case, I want you to take what I just told you and try to disprove it. Find something to disprove what I just told you. And if you can, put it in the chat, put it in the comments. I'd love to know what it is. But at the minimum here, I'm looking for a giant move coming up in VIX. And if you understand your market theory, then if VIX gets to 60, 70, or worse, it's going to be a very turbulent world. So trade accordingly. All right, guys. Well, not to go out on a downer, I wish I had an upper for you. I really do. But you're on YouTube. You don't need uppers from me. You can go click on a cat video. You can go click on a... I was watching a dog and a cat on a treadmill at the same time, and the dog wouldn't let the cat get on the treadmill, and then the cat started biting the dog. So there's lots of feel-good stuff out there. You don't need that stuff from me. I'm here to just give you what it is. So hopefully you found all of this helpful. Don't lose sight of the big picture stuff. Don't lose sight of it to do all these little Mickey Mouse short squeezes or interventions, or there's going to be news. There's going to be tons of news, and it'll be good, it'll be bad, but don't lose sight of these big picture stuff that I've been sharing with you in these videos, because they have guided you well. So my job will be to continue to do that for you. All right, guys, that's my time. Thanks as always for giving us the click. Leave us a like if we helped you. Leave us a subscribe. Actually, the subscribe is worth more than the like. So if your finger's about to fall off and you can only click once, give us the subscribe, not the like. If you happen to have the finger endurance to give us 2 clicks, give us the subscribe, give us that like. And if we really helped you out here at any point, leave us a comment. Let us know. Good, bad, or ugly. We like hearing from you guys. It really does help. All right, guys, that's my time. Have a great weekend. I'll see you for the next one. Cheers. Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.